3, test.
Okay, so for Team B, you can start whenever you are ready, and we will start the time when you start your presentation.
Despite seeing OSP as one of the blue chip stock in Thailand, the market may still have some doubt over the stock. Some may think it's just another lucky first mover. Some may think that it's a business with limited top-line potential. And some may think that it's a stock that earnings have been through its glorious days. As a financial analyst, today we are telling you it's the opposite, and that you should buy the stock while it is still undervalued. We are telling you that it's a business with unbreakable strength in branding and distribution. We are telling you that its top line will grow from investment made in Myanmar and CVIT. And we are telling you that it's a stock that profit margin will expand from vertical integration. A very good morning. Today we initiate a buy recommendation on OSP stock based on DCF valuation target price of 39.72 baht, representing an 18.6% upside. But before we dive into the detail, let's get to know the company a little better. OSP started off as a small pharmaceutical retailer and later expanded into the energy drink business, where it ascended to the #1 position in Thailand and Myanmar. This results in 70% of the revenue being generated from energy drinks. The leadership in Thailand and Myanmar energy drinks brings in consistent 18 billion baht every year. Now, after winning in the energy drinks, the company further expanded to personal care and functional drinks. In these markets, the company also secured the #1 position. This results in 30% of the revenue being generated from personal care and functional drinks. In functional drinks, CVIT, the vitamin C shot, recently emerged as the main revenue driver. Now, OSP aspires to be more than just a Thai company. In fact, they want to be a listed company that operates above Thai standards. This is why they implemented internal overhaul back in 2016 and equipped the company with management from global FMCGs. The immediate result that we see is an uplift in ESG standards. OSP's ESG standard rank almost on par with the global peers, while performing significantly superior to the domestic peers. So far, this is what the market has known, and there may still be some doubt over the stock. From now on, we will give you further clarification so that you can buy the stock with confidence.
Today, we tell you that you should buy OSP because you're looking at a business with unbreakable strength from branding and distribution. You're looking at a business with top-line growth potential from Myanmar and CVIT, and that you're looking at a business that the bottom line still expand from vertical integration. Let's start with the first one, the unbreakable strength. Well, in the past few years, the market has shown its maturity in growth. The silver lining for OSP has been the ability to maintain its market share at around 50%. And the doubt here is that whether or not, or will OSP be able to continue as the market leader? And our answer for you today is yes, it will still be the market leader, and that is because of the unbreakable strength. The first strength is the branding. The multi-brand strategy allows OSP to fight with its competitors, having not only the flagship M150, but also a wide selection of well-established brands that make it harder to compete. The second strength is the distribution capability. On the surface level, OSP possesses twice the number of CBG point of sale. And we dig our analysis deeper, and we found out that this number is actually an impossible number for CBG to achieve within a short period of time. And the reason to that is simple. As you can see, the distribution coverage extends throughout Thailand to areas that require a lot of investment and time commitment. And with all of these unbreakable strength, it's been displayed, and as the ability to maintain its market share moving forward, allowing OSP to enjoy the growth the same as the market.
In addition to strong fundamental, OSP has a growth capability in Myanmar and CVIT. First is a strong presence in Myanmar energy drink market, contributing 12% of sales. This market has a robust growth of over 20% CAGR for the last decade. The recent coup might spark the concern, but we believe that the country has a bright future ahead. From our own analysis on military coup around the world, reveal that household expenditure recover in long term as people need to spend for necessity. We use the criteria on sanction, casualty, year in power. We believe that Myanmar situation is similar to our observation and would follow the same pattern of growth. Second is vitamin C shot and the seaweed. Our global observation reveal a trend of replacing juice with healthier beverages. Thailand is expected to follow the same trends, and vitamin C shot will get the main benefits. As we can see here that vitamin C shot had a double-digit year-on-year growth for the past 5 years, comparing to small growth or decline in other category. We expect seaweed to continue leading the market as a first mover in 2012 and a recent year fierce competition from at least 8 competitors. Seaweed still hold the largest market share of 31%, despite selling at a higher price. These demonstrate a strength in branding and customer insight. Moreover, there is more opportunity in the traditional trade sale. Currently, seaweed sold 80% in the modern trade, while M150 and other FMCG mainly use traditional trade channel. We expect OSP to leverage its distribution coverage, expand seaweed into these untapped opportunity. As a result, the top line is expected to grow 6.2% CAGR, or an uplift of 3.3% from a strong domestic energy drink.
Now, the last doubt is on the bottom line. We argue today that the bottom line will expand because of vertical integration. Since IPO, OSP has been focused on trying to save costs. In fact, the cost-saving name changes from FitNet First to Fit Fast Firm and to Fast Forward 10X for the next 5 to 7 years. And although the company did not disclose in specific details on how they save costs, we went above and beyond and tried to find how these cost initiatives perform. And the result I highlight into 2 points. First is that we always see the outcome, always beat management guidance, and surprise us every analyst meeting. And second is that most of the cost saves are coming from the maintained margin, meaning it prevents the firm from paying out too much cost. Looking into the future, we expect the beat the goal outcome to continue as we foresee a 9% surplus from management guidance by assuming with conservative actions required for OSP to fulfill. And what's even better now is that most of the cost save will come from vertical integration, which is mainly to improve margin, which will positively affect the bottom line. And all of this will result in an uplift of EBIT CAGR from 2% of do-nothing case to 10% with feasible cost-saving plans.
So far, OSP has proven an attractive business. Now let's see whether its stock is at the right price. But before that, we have to understand the business model of OSP first. OSP employs different business model for different product lines. For example, M150 is the brand solely owned under OSP, while Seaweed is the brand under joint venture business, House also Sapa Food. Therefore, we decided to use some of the part valuation, dividing OSP into 3 business units: Core, JV House, and JV Taisho. Our DCF sum of the part valuation suggests the target price of 39.72 baht. We decided to use 3-stage FCFF valuation methodology to allow Seaweed to reach its maturity stage in the year 2029. Now for the core business, we project the revenue growth to be about 5.3% CAGR, driven by rapid growth of Myanmar energy drink sales, and also the expansion to traditional trade sales channel of Seaweed. We also project the cost-saving project to bump up gross profit margin to 36.1% and EBIT margin to 17.4% in the year 2026. Now, for JV House, we project the revenue to be growing at 13% CAGR, driven by expansion to traditional trade sales channel and the increase in consumption of vitamin C shot. For JV Taisho, we expect the revenue to be growing at 3% CAGR, driven by stable market share at home and also the marginal growth in domestic energy drink market. Now, to confirm our DCF valuation, we benchmarked the firm forward PE and PEG ratios with the peers. Both the ratios suggest that the stock is undervalued.
Now, moving on to the risk part. After assessing the downside risks, we would like to mention 2 things. First, how does OSP react to the most serious threat that it could not adjust the sugar content? And second, how the other 2 risks, which are the market growth and the market share, affect the target price? So, for the first question, even though a failure to adjust the sugar content leads to a large impact on the target price, OSP could adjust these by increasing the wholesaling price or increasing the price per volume. Next, we conducted scenario analysis to account for the other two risks, which are the market growth and the market share, leading to 38% upside in the best case and 9% downside in the worst case, which is highly unlikely. We therefore confirmed our buy recommendation based on unbreakable strength, top-line growth, and profit margin expansion. Thank you for your attention, and now the floor is open for Q&A.
Can you go to your revenue chart, the long-term revenue, just so I can see that? So basically what I see here is that you're saying that the CAGR is going to double from 2.7 to 5.3. So for what is, let's say Myanmar and Thailand are large markets, and the market share is pretty strong in those markets. I just find it difficult to see how it's going to go from 2.7 to 5.3. What would you say is the number one driver of that revenue growth? Not cost, not margin, just that revenue.
So the number one cause of the double in CAGR is from Myanmar growth. So we see that Myanmar has a lot of potential to grow in the future. If Myanmar consumption of energy drink per capita has a long way to go, and they have all the necessary drivers to grow.
Okay. Good answer. And the next question is, doesn't the market already see that? Don't investors already see that? Or what are they missing about that?
So I would like to address that question. I think we have already mentioned some of the doubts the market may have. Is that the first one is certainly the political unrest in Myanmar. And that is the main driver to how people assess or people view the Myanmar market as a disruption in the short term. They may not realize the long-term benefit gains that OSP may have. And the second is that the complication between the distribution capability for them, for OSP, to export into Myanmar, and also the foreign currency.
So let's follow that up. This will be my last one. Just that what you're saying, I think, what you're saying is that if I invest following your recommendation, I'm also making a bet that there's going to be there's either going to be political stability, or the political instability isn't going to impact the sales that much. And this is really the key difference between you and the market. Is that true?
Yes, that's correct.
Okay, thank you.
On Myanmar, can you quantify what is the impact of a depreciation of the currency?
Okay, so your question is around the impact of foreign currency. And sorry that we did not go in details on how, in specific numbers, on how they accounted for all of those impacts. But just to give you a big picture of the overview of how they categorize costs. So right now they are categorized as an export. So it will be onto it's going to be the intercompany transaction. In that sense, it will be entered into the profit and loss of the company. But right now, what they're trying to do is to increase the share in the Myanmar market, establish a factory, and that one will be categorized as a profit and loss in OCI. So that one will be an immunity for OSP as well in the end result.
Can you go back to the slide on the core energy drinks in Thailand? So what I want to hear from you is what is the underlying assumption here regarding the price increase and the volume growth under the context that Thailand is entering into a rapid aging society, and energy drink is definitely positively correlated with the size of your working class population, right, which is going down rapidly. So obviously, you have to explain it to me here. That what's the assumption behind that here?
So our underlying assumption in the forecast here is that we see that the market has reached the maturity for quite a long time. So we project the market does not only grow moderately, and the company's strength leads to the position of the market share being maintained throughout the next 5 years.
So do you forecast price increase or not? That is the question.
The price increase of the M150 or the entering, we do not account for the price increase because we believe that with OSP capability in cost management and vertical integrations, they are able to maintain the cost and able to maintain the price of selling energy drink.
So 0. Everything come from the volume.
Yes.
Okay.
Which this chart again presents us with another issue where you're going from a CAGR of a slow growth CAGR to a fast growth business. And now you've told us without, significant price rises, and that's Thailand. Can you give us some comfort that that's going to be able to be hit? Because that's, even though it's a small number, it's still a pretty significant increase. It just goes up and up and up. I mean, these guys are really knocking it out of the park. But are they? Look at 2021, look at 2020 and before that. So just help us understand this.
Yeah, sure. So I think it's obviously okay for you to question the growth in the past, but let me remind you that around 2020 is around the disruption in COVID-19 situation, and that resulted in a close down in traditional trade sales, and that is what has disrupted the market. So we see this as an outlier of the growth, and if we project,
and there was no recovery in 2021. Also, it was hit just as hard as 2020. It looks like, right? So you haven't seen any recovery yet.
Okay, so as in a market perspective, yes, it hasn't seen any recovery, but OSP, I think yesterday OSP has already announced the year 2021 in summary of the financial, and it says it pronounced that we are having a better than the market situation. So we see that as a strength of the company that can beat the market situation that hasn't recovered yet. And in the long term, as you say, as we mentioned, that it will go along the same line with the market, which is really a conservative way already.
Sorry, but you talk about the price increase as the company recently announced, but you did not assume that in your forecast, right? Just to be clear.
Okay.
So basically you assume constant market share, no price increase, so everything will basically go with the industry, and you assume that the industry will recover and go back to 3% plus minus range.
Yes.
Okay.
I think, may I clarify maybe some of the thoughts that I might have from the recent announcement for OSP. It announced that it will increase the price from 10 baht to 12 baht. And allow me to clarify that yesterday we also listened to the opportunity days, and they suggest that the 12 baht model will be another product line add up to the 10 baht. So that is the reason why we still think that our valuation still stand at the end of the day.
For your assumptions, what will make you change your current buy recommendation? What assumptions would have to change?
So the assumptions has a variety to include. So first thing is maybe the cost-cutting initiative that we expect that OSP could do, that meeting that goal. So if they are not able to implement these cost-cutting initiative and the margins stay the same, we will change our recommendation from a buy to hold recommendations.
Another to that is also the Myanmar market. So if we expect the Myanmar market to stay the same with zero growth whatsoever, it will also change our recommendation from buy to hold.
You mentioned about the importance of vertical integration, but I have to admit that there was a lot of information on the slide, so I didn't understand it completely. What is the key vertical integration?
1 minute left.
Okay, thank you that you asked that question. So vertical integration means that it consolidates the supply chain. So meaning the margins that might have been paid to supplier, it will be as a margin in-house.
What area are
Yeah, sure.
they going into?
So they are implementing, actually in the next quarter, we will see the result of an opening of glass bottling facility in Myanmar. So that one is the key driver of the margins.
That is the main vertical integration issue?
Yep.
Not sugar or something like that?
Yep.
Okay. Also, another question, why did they do CVIT as a JV? Since we just got probably 20 seconds, just to give me a...
So actually, it's a strategy that OSP use so that they can use branding, technology, and also customer insight. So this means that they have a quick time route to market, and also they can share downside risk with their partner parties.
Thank you.
Thank you. Thank you.
Okay, so thank you Team A and Team B. So now we'll have a short break for 10 minutes and we will come back after that. Thank you, Kap.